Welcome to Fantastic Vision. Please subscribe us before you watch today's video. Chips are now hard currency, indispensable to everyone. They are not only central to the tech world, but also a sensitive point in global political wrangling. Take ASML, the Dutch lithography giant, for example. Their leadership has a deeply complex and unfathomable attitude toward Western efforts to choke China. They intended to contain China, but what was the outcome? This tactic backfired. Instead of stumbling the Chinese chip industry, it severely harmed Western companies and turned the global chip industry upside down. Since 2018, the United States has continuously imposed wave after wave of restrictions on the Chinese chip industry. Initially, major companies like ZTE and Huawei suffered supply chain disruptions, leaving them struggling. By 2020, even ASML, the Dutch company, could no longer withstand the pressure. Selling its high-end EUV lithography equipment to China was a non-starter. ASML's former CEO, David Wennink, warned as early as 2024, if the West continues to tighten its grip on China, it will ultimately hurt its own people. In July 2024, he was even more blunt, stating that these US restrictions were driven by ideology and had little to do with national security. It was a remarkably direct one. The Chinese market used to be ASML's cash cow. In the third quarter of the previous year, Chinese sales accounted for nearly half of their total revenue. But in June 2024, the Dutch government followed the US in tightening restrictions. In October, the US went even further, barring the sale of even older ASML equipment to some Chinese factories. ASML was now truly backed into a corner. In December 2024, the US Department of Commerce issued new regulations, further expanding the scope of the restrictions. The result? Some equipment in ASML's warehouses simply couldn't be shipped. Faced with these pressures, ASML itself estimates that its revenue this year will be approximately 30 billion euros, but its market share in China is expected to fall to 20%. In July 2024, ASML's stock price plummeted from its peak due to geopolitical factors. By October, it had plummeted by 16%, its largest single-day drop in 26 years, primarily due to slashed sales forecasts and immense pressure from the Chinese market. Wennink disagreed, emphasizing that ASML is not an American company, so why should it be completely at the mercy of the US? He stated that the company has been operating in China for 30 years and has a responsibility to its customers and employees. His stance is for the benefit of shareholders and suppliers, not a pro-China stance. ASML executives understand that attempts to isolate China are futile and will only force China to innovate on its own. In April 2024, the US even threatened to stop its allies from providing services to Chinese equipment, adding further hurdles for ASML. While ASML estimates that these service restrictions will have a limited financial impact between 2025 and 2030, Wennink predicts that this interminable conflict could persist for decades. Western politicians, driven by political objectives, sometimes disregard the well-being of businesses, leaving Western companies caught between political priorities and market rules. China has made significant progress in lithography equipment. For example, Shanghai Microelectronics achieved mass production of 28 nanometers lithography equipment in 2022, a truly domestic technological breakthrough. In August 2024, the Huawei Mate 60 was released, equipped with the domestically produced 7 nanometers Kirin 9000S chip, directly demonstrating that China has initially established independent production lines for advanced chips. SMIC is even more ambitious, anticipating the launch of its 5 nanometers process this year. While costs remain high, yield rates are gradually improving. Regarding high-end computing chips, Huawei's Ascend 910C processor, slated for release in 2024, utilizes a 6nm process, and its performance is already catching up to NVIDIA's H100. This speed is truly impressive. China's chip self-sufficiency rate is expected to approach half this year, and the low-end supply chain is already largely self-sufficient, laying a more solid foundation for domestic production. China's cost advantage in lithography machines is undeniable. With all components domestically produced, there's no need to pay exorbitant patent fees, a stark contrast to ASML, which must purchase expensive components from Japan and the United States. Wenning cited the rapid rise of China's electric vehicles as an example, arguing that blockades only strengthen competitors. He believes that being strangled has made China more aware of the importance of independent control, accelerating the development of a comprehensive supply chain. China is the world's largest manufacturer of mobile devices, and its demand for lithography machines is staggering, which in itself is a powerful force driving the development of domestic technology. China's cheap and reliable chips are exported worldwide, driving the spread of the global internet and making technological convenience accessible to everyone. This demonstrates China's essential role in the global supply chain. Despite numerous restrictions, ASML established a factory in Beijing in March of this year, specifically to serve Chinese customers. What does this indicate? Despite immense political pressure, companies are reluctant to completely abandon the vast market pie offered by China. Other countries, such as India and Southeast Asia, primarily focus on foundry services, with relatively limited demand for high-end lithography equipment. In this comparison, the strategic importance of the Chinese market becomes even more pronounced. China has always adhered to open trade and welcomed foreign investment, but external blockades have accelerated the pace of domestic substitution, resulting in a loss of market share to domestic companies. Wenning's prediction that the chip war will continue for decades due to geopolitical interests is heartbreaking and suggests that the global chip industry will be in a state of long-term dynamic adjustment. If Western companies continue to sacrifice market interests, they may truly die. Once China becomes truly self-sufficient, their vast market will no longer require external support. The trend of technological progress is unstoppable. Market forces will ultimately prevail. The higher the technological walls are built, the smaller the space for cooperation becomes, ultimately resulting in mutual losses. The ultimate winner of this chip war will not be determined by who can stifle the other, but rather by who can better adapt to change and truly meet market demand.